Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, December the 20th. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's get it on with some economic data. Across the pond, not really a whole lot, but out of Great Britain, we did get retail sales month over month coming in at 1.4%, crushing the estimate of 0.3%. So that is a good sign. We've not been seeing great data coming out of the European area, so this one's a good one. And they also revised up last month's number from negative 0.7% to a negative 0.4%, so a nice revision there. Then we go over to the monetary policy. Basically, they keep their interest rates unchanged in Great Britain. They see the global markets starting to slow down a little earlier than I guess our Fed has. I've been trying to tell them, with tweets, but they don't follow me, I guess. All right, then here in the United States, we got initial unemployment claims coming in at 214,000, expected to be 216, so that's right in line with expectations. And then CB leading index came in at 0.2%, expected to be unchanged, so a little bit better than expected there. And finally, we got natural gas storages coming in at a drawdown of 141 billion cubic feet, expected to be a drawdown of 136 billion cubic feet. So a little bit more of a drawdown than expected there, but pretty much in line with expectations for the most part. Not enough to really move any market, to be quite honest, and not a lot of people trade natural gas anyway. On to crude oil. Crude oil's given up a little bit of ground after yesterday. I thought we were getting a little bit of a double bottom. It looked pretty good, but today it is making it more into a continuation pattern. We did not get confirmation to the upside. It's actually breaking through this 23 Fibonacci. So that is not a good sign if you are bullish. It could easily go, if it breaks below this, down closer to test 45. So that being said, no discernible change of direction here. To me, it almost looks like a continuation that we're going to go another leg down. These markets have been pushing extremes quite a bit, as we can see here in crude oil. This is way outside of the value area, and it's finding acceptance here because we're getting a lot of trade, as you can see at this volume node here, a lot of acceptance at lower levels. So if you are kind of in the camp that I'm in, that I don't really care about Russia and Saudi Arabia's not doing well when the gold or the oil prices start dipping like this, the rest of the global economies are better off for that. So in a sense, if you look at higher oil prices is good for Russia and Saudi Arabia, well, that, it slows down the velocity of money globally when that happens. If the rest of the global markets do well when there's low oil prices and it's not a tax on those people, then that is going to increase velocity of money globally, which is the way to get out of these slowing economies, is to create velocity of money. As long as the money isn't consolidated in one area for one person and multiple people are taking or getting the upside, then that works out a lot better. It's the easiest way I can try and explain it, and I don't know if I did very well there. So let me know. Hit me up, at me, at Wolfman's blog if I didn't explain that very well, and I'll try and do it a little bit better. But we can see crude oil making another new low today. Gold moving higher as the equities are rolling. It's not looking very good, so it's a flight to safety in gold futures. So yesterday, gold was looking like it was topping off and maybe going to come back down to this point of control, which, I've been talking about this till I'm blue in the face. I think the markets were going to come to these point of controls and start to slow down, but that's not really the case right now. It seems like the market wants to really push the extremes. I thought we were going to test extremes, come back and settle down, but it looks like the market really wants to put some pain in the game. with the extremes that they're trying to push to. All right, that was gold. Now Bitcoin. Only reason why I brought up Bitcoin is rallying, and it's rallied ever since. I'm the catalyst. No, it started rallying. It's just coincidental. When I put something up for sale on Craigslist and they asked if I would accept crypto, I clicked on, for the first time ever, I would accept crypto because I was like, at these levels, what can it hurt? And what I'm selling is only like $100. So what the heck? I'll get involved at these levels, even if it's just a toss away. So that was the catalyst that started sending this up, and probably sell it at the, somebody will hit me up on the crypto at the highs. All right, so VIX. VIX is moving higher as we're seeing some weakness in the overall equities. We can see here with the Dow Jones Industrial Average down about 180 some odd points. Was thinking, we might get some kind of pattern here. We ended up at the upper half of this today. I'd like to see it actually come down, test the 61 Fibonacci level today, slam down, and then get that strength late in the day as people come in late in the day and push that market higher. What we've been seeing is throughout the day, the market trying to drive higher, and then late in the day, those slams happen. That is not very good at all if you are bullish. That is more of a bearish trading pattern as people puke out towards the end of the day. And that's what we've been seeing the last several days. Today, a move higher, like a strong move higher late in the day would make this chart look very good, like a nice little bottom. I might start jumping into the water at that point. Right now, though, the market is really bearish. I'm a little bit bullish, so I'm trying to hold off on making any moves right now in either direction until I see some kind of support or a market turnaround, some kind of catalyst to change this overall market mentality anyway. And then we look at the NASDAQ. It's down on the day as well. It came down to this Fibonacci extension, the 0 Fibonacci extension, which lines up with the 50 Fibonacci. So that is going to be a major support level. We have gotten extended outside of the value area. It's starting to probably get a little bit thin, overdone down here. This should act as some support. But that being said, tech has suffered the most. We could see some capitulation start to happen once we start getting outside this value area and then really overextended. That's where you start seeing that capitulation start to happen. I don't believe we've seen capitulation yet. And then E-mini S&Ps, they blew through those Fibonacci extensions and its own 38.2 Fibonacci. Again, right here in the middle, this does not look like anything but a continuation pattern to me. Settling above in the green from where we open would make this look very nice. Anything other than that, it is a toss-up, to be quite honest. And I would say the probabilities are to the downside if it doesn't do what I just talked about. All right, so this is what I'm talking about. Late in the day, we're starting to see these. See, you can see it afternoon my time, which is after 2 New York. That is where we're seeing all of this selling pressure coming in late in the day, and that is very bearish. So as long as we don't really get that happening again, or when we start to see that ebb a little bit and we start seeing some more aggressiveness or aggressive buying at the end of the day, I don't think that we're going to get out of this little bit of a downward spiral. So watch that. Late in the day is very telling as to what the overall market mentality is. So that's about it. Like I said, I haven't added anything to my position. I haven't taken anything off. The only thing I'm still in is the long eBay. I'm holding on to that one for right now. I'm trying to figure out if I want to sell calls or puts, and I really don't want to sell either right now. I don't want to sell the puts to dollar cost average if we haven't seen the lows, and I don't want to sell calls against this because the market could easily turn around in eBay and clip me on those. So I'm going to hold off on that a little bit longer too. And that's about it. I am going to be doing a webinar today, later on this afternoon, right after the close, on the long put calendar. So this bearish cycle, we're in a bearish trend, is perfect for this type of scenario. Yes, we do have a little bit higher implied volatility. But if we continue to see this market come off, we're going to see volatility expand, which is what we want as part of our thesis on trading this strategy. So check it out. I'm going to go through several steps on what you've got to follow in order to stay mechanical. Take some of the guesswork out of these strategies is really what I want to do, so that you guys are more confident in trading these types of instruments. So go to protraderstrategies.com, sign up for that. I break it down so it is very basic. So even my kid who sits next to me and plays Fortnite can understand. And that's about it for you. All right. So if you can't take that, take it easy.